All right. Good morning, everybody. It is 8:30 on August 20th. If you could just let me know in the chat if you can hear me okay, or I think Kara is back in the background. Kara, can you hear me and see my screen and everything? All okay. All right. Awesome. Thanks, Joe. All right. Okay, perfect. Well, I know it's 8:30 on Wednesday because, of course, my neighbors have their lawn service out and my dogs are barking. So I always know exactly what time Breakfast Club will start on Wednesday. John is off today. Not off, he's just got a prior engagement. So I will be doing Breakfast Club on my own. So please feel free to write anything that you want in the chat. Let me know, if there's a sector or stock, anything that you want me to look at, that is totally fine. We'll get through a couple of slides about kind of our midweek update on where we are today, or where we are this week. So in terms of some stock market leaders, it's pretty nasty yesterday. Let me just get my laser pointer here. So in the far right column, the percent change, Palantir leading off with the sort of negativity that we had yesterday. AMD, Nvidia, Meta, pretty much all Mag 7 stocks down. So we'll talk about that in just a second. Intel seeing a lifeline from the current administration, there's a lot of news about Intel kind of having a rebound. Now, whether this is going to be one of those situations where, you know, the news kind of peters out and nothing comes of this, we don't know, but certainly Intel right now on the rise. And it was interesting because I was talking to Dave a couple of days ago, and Intel kept hitting our scans, and we were like, I don't know, do you really want to trade Intel right now? But certainly it is, it's in the news quite a bit, and having a nice little gain here. But overall, Palantir had a bearish report. Someone actually came out and said Palantir is worth no more than $40 a share. Even though it just had $1 billion in, was it $1 billion in revenue? $1 billion, I think it was $1 billion in revenue in a quarter. First time that's ever happened for that stock. But either way, some negative news. AMD was also, was it GF Industries came out and said AMD, is not a buy anymore. So there was some negativity around some of those chip stocks. And that kind of brought the whole NASDAQ down yesterday. So we're going to talk about, where things might be going in a second, and whether this is just individual news stories about, downgrades, or if this is something bigger. So let's talk about some other notables that happened yesterday, especially for those who may have been in, or who are in, the Millionaires Trader Club. We are out of Viking Therapeutics, but this is just one of those fun charts where Viking Therapeutics dropped 42% after the release of its results from its weight loss pill. And as you might be able to imagine, the weight loss pill results were not that good. A lot of people, I think it was a third of people, came out and said that they didn't want to continue on with the drug due to side effects. So this is just a personal thing for me. There's trading and investing and medical stocks for me, just because I don't follow the medical industry that much. Medical stocks, to me, I actually usually filter out of medical stocks. And I'll tell you a little brief story. When I was I was under my dad's trading account. We actually we pooled our accounts together back in Smith Barney days, and because we had it was really my dad's account, but because I was under a family account, I got to trade for I had zero commissions. And that was back when like commissions were $20, or whatever. And so I used to sell a lot of covered calls because I was like, well, I just, I'm trying to build up my account. And I kept selling covered calls on medical stocks because I didn't really know what I was doing. And I was like, oh, medical stocks are great. Like I can sit there and sell 30 days out and get all this like huge return on medical stocks. I'm like, just, do other people not know about this? Like, this is great. And then, it only takes one or two of these types of days before you realize, or at least before I realized, I don't like trading medical stocks. Medical stocks for me, like, that's an investment. That's like when you know the company, you really do a deep dive on the company, and then that's fine. That can be great. Because really, by all accounts, on a technical analysis chart, we had a breakout, we had movement higher, we had momentum on our side, everything else. So if you were just looking at a chart, just doing technical analysis, you'd say, hey, this is a great company to be in. And then, next day it kind of falls apart. So just a personal thing, medical stocks for me are more of an investment than a trading vehicle. But if you've figured out trading it, medical stocks, then good for you. You can always drop me some hints. Anyway, so what is going on? Today the Fed is overall, the Fed's still mulling over interest rates. They are releasing their meeting minutes later today at 2 o'clock. So I would expect some volatility around that. We do know that Michelle Bowman of the Fed says she has not changed her stance on calls for cutting rates. She was a dissenter from the majority last time meeting minutes came around. So she says, hey, don't expect anything different. I've not changed my stance. There will be two other Fed governors talking throughout the day today, but really it's the meeting minutes. Now, meeting minutes, yes, there's some volatility around it, but everyone essentially knows what's already going on. What the meeting minutes will tell us is we'll get a deeper dive into what maybe wasn't said in any of the press conferences that we've had over the previous couple of weeks. So it's, analysts like to take a deep dive into meeting minutes, but again, most of that information is already known, but there is usually a little volatility pop around 2 o'clock when that gets released. So if you're trading zero DTEs, definitely watch out for that. But really, Jackson Hole symposium this at the end of the week will probably also have a little bit more information about what the Fed is planning. So, or how they really feel about stuff. As far as retail earnings go, we have the TJX companies, that's like Marshalls, Home Goods, TJ Maxx, all that sort of good stuff. Lowe's, Target, Estee Lauder, Home Depot had earnings. Was it yesterday? They came out and beat earnings. So there is certainly some, and they're focusing on the pro home builder a little bit more as retail, or as the normal home improvement stuff for individuals is going down a little bit, whether that's tariffs, whether that's the cost of homes are just super expensive, and so Home Depot and Lowe's, or at least Lowe's, is expected to mention some more stuff about going after the pro construction workers more than the retail customer. But either way, we're going to find out a little bit more about if consumers are buying, and if consumers are still buying, are they changing over from luxury goods to low cost goods? Certainly TJ Maxx, Home Goods, not saying anything about their stuff, but it's not a Rolex either. So are people flooding into TJX companies and Target a little bit more, or maybe they're going more into Walmart than Target, all that sort of stuff. So we'll kind of see more about the retail customer and spending habits. So as far as sector rotation goes, this is the chart that we showed on Monday. And I mentioned, hey, look out for real estate. That seems to be a little bit underdone, or oversold, I guess. And then it said communication services getting a little bit hot, but the rest of the stuff was just sort of in the middle. So if we look at what happened, this is Tuesday. I know it says today. That's because I took this screenshot at the close of yesterday. So real estate was our number one leader as of yesterday. But if you look at this, and this answers the question I think that Joe asked, is if you look at what's at the top, we have real estate, consumer staples, utilities, healthcare. I mean, yes, this is only one day. One day does not make a trend, but this is definitely a rotation into more defensive stocks. Consumer discretionary communication services, information technology, those are all your higher risk technology things, those are all at the bottom. So if we go ahead to what happened over the last 5 days, so now we are including yesterday, Monday, and then Friday, Wednesday, Thursday in all of this. Consumer discretionary still at the healthcare was all UNH on Friday. That continues to go with the news that Buffett is buying into UNH. But again, real estate jumps to the, to near the top of the leaderboard, materials, financials, all that sort of stuff. Whereas again, in communication services, information technology, now over the last 5 days, definitely heading a little bit lower. So this could indicate a rotation into a little bit more defensive stocks. Now, we've talked about this for August being, the word of the month really for me is cautious. I know we've had some nice moves over the last 2 weeks to the upside, even though I've been saying August and September are 2 cautious months, and this may start to show, hey, maybe I was 2 weeks late, but this might start showing a rotation into some more defensive related stocks. If you look at the SPX, these are using Heikin-Ashi candles. If you don't know what Heikin-Ashi candles are, I would invite you to join MTC, because in MTC tomorrow, I'm going to show you how to develop a trading strategy around using Heikin-Ashi candlesticks. But we use Heikin-Ashi candles to help smooth out the trend. And certainly what we see on the SPX, this is a daily chart of the SPX. We had a nice move higher. This is a Fibonacci retracement line. So what we said was, what I was looking at was this 64.20 level as a first line of support. If we don't get that, then 63.80-ish, somewhere in there would be our next line of support. However, we have these green bars. I think we talked about this on Monday, where after a series of green bars, we had 10 green bars, and that tends to be the time where we start seeing red bars kind of come in. And certainly now over the last 2 days in SPX, we've had 2 Heikin-Ashi red candles. So that it doesn't mean, I'm not saying that we're going to have this huge drop like we had back then. Actually, let me move forward one chart. In a long-term trend that is the SPX, we've had periods before, and I've circled them, where we've had 3 red Heikin-Ashi bars in a row. And yes, that was a little bit of a dip, maybe a 2% to 3% dip. We had this sort of drifting lower, and that was 3 red bars. So I'm not saying that everything is falling apart or anything like that, but I am saying that we are in a period of red Heikin-Ashi candles, which means maybe the time is, I'm not financial planner, but you might want to tighten up your stops, might want to take some profit off the table, whatever the case may be. Palantir was up 150% since March, I think, and Palantir's now had 5 trading 5 days in a row where it's traded lower. But maybe now's the time to take a little bit off the table on Palantir if you enjoyed 150% gain. I don't know. Talk to your financial advisor on all that sort of stuff. But my point here is, in a long uptrend, there are periods where we see 3 red Heikin-Ashi candles, 3 or even 4 in a row. It doesn't mean that everything is falling apart. You can see actually this green line. Let me go back a slide. See, this green line is the 20-day moving average. And so if you see, in this long-term trend, all we had was red Heikin-Ashi gets us down to the 20-day moving average. We bounce off of it. Red Heikin-Ashi gets us down to the 20-day moving average. We bounce off of it. This red Heikin-Ashi actually got us below the 20-day moving average, but 2 days later, we're back above it. So now going back a slide, that's why we kind of identified this 6,380 line. It's also right by that 20-day moving average. So it might just be a little temporary bounce lower or move lower, and then we bounce higher from here. I don't know, we don't know, but we're just got to be a little bit cautious at this level. And certainly, so that's why I drew this long black line here. This is more what I'm looking at is, can we stay above the long-term trend line? We are very close to it right now. And if If this is just a temporary blip, fine. Now, whether I drew the black line in the exact right spot, and maybe there's a dip below the black line and a quick reversal above it, who knows? Drawing lines, you give the same chart to everyone and say, hey, draw a trend line. Everyone's going to draw it in a different place. So, but what I'm looking for is, can we kind of hold this line? We do have a series of higher highs and higher lows on SPX using Heikin-Ashi candles. So, again, the word of the day is just sort of caution. Now, because John's not here, I'm going to pick on one of his favorite stocks, that is being Netflix. Not saying anything bad about Netflix. There's still a lot of reasons to be bullish on Netflix overall. But I do, this is just kind of one of those like Mag 7, like, is this sector rotation, or is this just, something, a 1 or 2 day blip and we're going to move higher? So if you look at Netflix overall, really since, I'd say since middle of April, it's been moving sideways. Yes, it's been moving up, but then it kind of moved down, then it's back up and whatever. So, the teal lines are kind of the overall, sideways movement for a while. But in the shorter term, in the last 3 months, now what we have is we have a red Heikin-Ashi candle, so it's flipping over. We'll see, maybe, there are false Heikin-Ashi candles, where it goes from red to green, in a 2-bar sequence. So we'll see. But right now, if this holds, what we have is a lower high, and this technically is a lower low than this swing back here. So if that starts happening a little bit more in these Mag 7 stocks, Mag 7 really kind of controls the market right now, or for the last couple of years. Again, we just got to be a little bit cautious on that. For the most part, though, what we're really waiting for is the end, the start of the school year, everything. I mean, we've so many big hedge funds kind of on vacation for the next, as the summer sort of winds down. So there's just a lot of, it's kind of a messy market, I think, right now. And I think we'll start seeing a little bit more clarity in a couple of weeks when everyone gets back from the Hamptons and all that fun stuff. So, so that is really it for today. Let me just go quickly. Hear anything, Andrew? Okay, thanks, Joe, for helping out Andrew. Yeah, the thing with the lesser established medical and biotechs is that disappointing news crushes the stock. Yes, it's not one of my favorite things. I think there are, there's nothing about this business is easy. So for me, I like to stick with things that are easier, and medical is just not. It's just not an area that I don't spend a lot of time researching medical stuff unless someone asks me to. It's not my thing. Anyway, if there's no other questions, or if there's nothing else that you want me to look at, then that is going to be it for Wednesday's Breakfast Club. We will be back on Monday. And I don't know of any, I don't think there's any other special webinars or anything that I'm supposed to tell you about. So I think we are good to go. And if you do think of something, then just throw it in the chat, and I'll take a look in the chat later on this afternoon and can answer you there. I do, normally I do like to try to find free trade ideas for everyone. I was looking at some seasonal trades this morning. I was looking at just some, my other favorite free trade to give you guys are the 10 period crossing above the 30 period moving average, and both being above the 200. Well, we didn't have that many stocks that we didn't have any. I don't think that that came across my scan this morning, where that happened yesterday. No crossovers yesterday. Seasonals are looking pretty weak in end of August, so I didn't find any good just long calls or puts. That's the thing, is it's not even like, oh, okay, well, there's no long calls, let's just go on the put side for August. August is just it's a 50-50 kind of thing, and I don't like trading 50-50 markets that much, not on long calls and long puts. So anyway, all right, All right, thanks everybody, and thank you, Kara, for hosting today in place of John. We'll see you all soon on one of the other Trader Reserve channels. So thanks.